Which should you buy first? Should you buy your own home? Or should you buy the investment property? It's pretty hard to decide. So in this video, we're going to be breaking down the pros and the cons of each of these options and how there could be somewhere in the middle, which I'll reveal to you towards the end of this video, that could be the right option for you if you're willing to take on a little bit of work and maximize your potential to build out your property portfolio in a faster period of time. Now, my name's Luke and I talk all things real estate, renovating and financial freedom here on the channel. Make sure you like this video, subscribe to the channel and head over to purposeproperty.com.au if you're looking to buy a property here in the Brisbane market in the next 6 months. Now, what did we do? When we bought our first property, we actually bought our own home. But if I could go back, we might have changed that situation because there are some great advantages to buying an investment property first. And there's even some secrets if you want to buy an investment property first by using the right structures to still get access to the first home owner grants and concessions in your personal name. Now let's run through the pros and cons of buying your own home first. Buying your own home is a massive achievement. Given the property prices here in Australia, that they're getting to a significant level above wages, around that 8 to 10 times the average wage, most Australians are going to struggle to break into the property market. Now here in Southeast Queensland, the average first home buyer and a lot of investors sit in the price point between 5 to 800K. So if you're looking to break into the market, that's the type of money you're going to need. Somewhere between a 5 to 20% deposit on say a 700K home, you're going to need roughly $35,000 plus closing costs to buy your first property at say a 700K price point. So what are the advantages of buying your own home first? A lot of people talk about security, the feeling of being in your own home, having a roof over your head, not having to be at the whim of a landlord, rents raising on you, having to move out every 12 to 24 months and find a new place to live. Security can be a big factor in the reasons you might want to make that own home decision first, rather than looking at investment properties. Especially if you've got kids or you've got an established career, buying your own home first can make sense. Another big positive of buying your own home is the capital gains become tax-free. As long as you're not renting out an Airbnb or you've got some income coming in off your property, you should have a 100% capital gains tax-free exemption on your own home. So if that property goes from $700,000 to $800,000 and you sell after a few years, you'll be able to take a $100,000 capital gain tax-free and roll that money into your next purchase or into your next investments. Another great thing about buying your own home first is you can add value through renovations. Yes, this can be a bit of hard yakka and a lot of hard work. Emily and I certainly know that. We've done renovations on every single property that we've bought to fast track our property investing journey and to build out a portfolio over time. So getting into your own home first means you can get your hands dirty, put the overalls on, grab the paint sprayer, sand some floors, and that's exactly what Emily and I did. We bought our own home first and we added value through renovations. Now you're going to be pretty green when you're renovating on your first home, but if you can get your dad or your uncle or some mates who are tradies to help you out, it can be a great way to add value to your first property and create some equity, which you can then leverage to look at buying investment properties. Now let's talk about some of the negatives of buying your own home first. And to me, one of the big negatives is the impact on your serviceability or your borrowing capacity. What this means is when you go back to the bank and you have your own home, you don't get any additional rental income for your own place. And so what that means is when the mortgage brokers and banks punch the numbers into their calculators and their spreadsheets, you're actually going to have typically less borrowing capacity for future purchases. So say you buy that 700K first home, you may not have the serviceability to buy another property. So it can really limit your borrowing power. Another issue with buying your own home, like we spoke about before with the renovations, is homeowners can get a little bit emotional and overcapitalize. You've heard about the marble bench tops that were $28,000 rather than just buying the nice white stone bench tops that were $8,000, or spending too much money on a massive back deck when really a 3x6 meter back deck would have been just fine. So homeowners tend to overcapitalize and overspend on their own place because it's for them, it's an emotional buying decision. So that's something you need to be wary of when you've got your own place, is that you may overcapitalize. Another major con of buying your own home first is the tax deductibility. Your own home is not deductible for tax purposes. So when you do your tax return with your accountant and you look at the income and expenses that you have for the year, the interest bill on your own home, which could be say $25,000 to $50,000 a year in interest, is not deductible because it's your own home and not an investment. So let's start talking about an investment property and some of the pros and cons of buying that asset first. On the flip side, let's kick off with that tax deductibility. You've got the benefit of claiming all of your interest and further expenses in your tax return. Not just only interest, but how about council rates, water, maintenance? There's lots of items, even depreciation is a great one because it's a non-cash tax deduction. There are so many deductions that you can get and claim against the income of not only your investment property, but your day job income if the property is negatively geared. Another great reason to buy an investment property first is you can begin to scale. If you're renting somewhere else and you're able to buy an investment property and it's going to grow, then you can use that income from that investment property to boost your serviceability and begin to scale your property portfolio faster. You're buying more assets which are bringing you in income, which can add to your serviceability, which can allow you to get more leverage to buy the next investment. Of course, you need to run the detailed numbers of your income, your expenses, plus the property income and expenses to make sure the numbers stack up. But in this case, comparing your own home to an investment, the investment property is far more scalable in building out a property portfolio. This leads me into building a bigger asset base. If you're building a property portfolio faster, you're building a larger asset base in a shorter period of time, which gives you the benefits of compound growth year on year. If I can scale a $3 million property portfolio over 24 months or over 5 years versus someone else who takes 10 years to get that scale, I'm getting compound from year 3 or year 5 on a $3 million asset base, while someone else who bought their own home first needs to wait till year 10 to get the compounding growth on a $3 million asset base. So getting your foot in the door and buying an investment property earlier can let you scale faster and get the benefits of that compound growth. Let's talk about some of the cons. Well, you're going to be renting and you're going to be delaying gratification. And that means you may have to move each year. There might be some turbulence in your life where you get kicked out or the rents go up on your own home if you're renting. So you need to take into account that your lifestyle may be impacted by this decision to invest first. You also need to be aware that you are becoming a property owner, landlord, or I like to use the word steward in my situation rather than landlord. It sounds a bit more aggressive. So you're stewarding this property. It means you need to look after the property and you need to look after the tenants. You need to be reasonable with your rental increases. You need to look after the home, the roof, the gutters, the ceilings, the air cons. All of that needs service and it all needs maintenance over time. So you need to look at a maintenance plan. You need to appoint a property manager. You need to deal more with your accountant because your things are getting more complex. So you've got to take that all into account when you step into the world of property investing and buy that investment property first. So which is right for you? Should you buy your own home or should you buy an investment property first? And what is the option in the middle? Now, it comes down to your own personal situation, of course. If you're the type of person that does want to get their own home first, get that big rock in the jar, you need the stability, the security, you like the capital gains tax free, and you do want to make your house a home, then buying your own home first could be the right option. If you're the type of person that wants to scale fast, invest, build an asset base, work hard while you're young and maybe before you've got kids, it can be a great option to get into the investment property first. So what is this option down the middle, the secret option to maximize your opportunity? And that's potentially buying your own home and converting it into an investment property. Now, there's a couple of ways you can actually do this. So Emily and I did exactly that. We bought our own home on the north side of Brisbane, only a few kilometres from Brisbane CBD, and we used multiple levers, which I talk about a lot on the YouTube channel, to boost our strategy and to fast track our journey. So one of those levers was a cosmetic renovation. We added an entirely new bathroom to the lower level, added a kitchenette. We then pulled another lever and house hacked. We rented out several rooms upstairs to other people. Yes, that was more difficult for our own lifestyle, but it was a sacrifice we were willing to make to fast track our journey. And we've got clients doing exactly this. I know several clients that have just bought a renovator and they're willing to get their hands dirty, add value, buy it in a great location with some long-term potential. Other clients are looking at that house hacking strategy where they bought a 3-bedroom place and they're renting out the other 2 bedrooms for some extra income and to fast track their savings for their next investment purchase. So you've got to look at what's right for you, but if you want to buy your own home first, with the thought process is going to be for investment purposes, that's where you can really maximize your returns and fast track your journey. You'll be able to pull out equity faster by doing those cosmetic renovations first. You'll be able to potentially get extra income by renting out some bedrooms to some flatmates or to some family members. So you could look at that strategy down the middle if that's the right option for you. Now, the extra on all of that is you can potentially buy using a corporate trustee and a trust structure to enable you to get access to the state and federal grants. If you bought an investment property, say for $500,000, and you didn't want to miss out on getting those first home owner grants, say the stamp duty concession here in Queensland, then buying with a corporate trustee and a trust could be the right option for you to still enable you to get those grants in your personal name. So there's lots of options. We've unpacked lots of pros and cons of each side. Let me know down in the comments below what you've done in buying your first property or what you will do when you look to buy your first place. I'd love to hear from you in the comments below. Drop a like on this video, subscribe to the channel, and if you want to see a tax template which talks about the income and expenses that you can deduct for an investment property, click this video over here. Thanks for sticking around. I'll see you in the next one. Peace.